Go ahead and record this for y'all. Okay, so welcome to the third week of the trading year. Hang on one sec. Let me go through all the participants here. All right. Cool. All right. Sound check. Can you guys hear me? All right. Perfect. Cool. All right, guys. So let's go ahead and get started with today's market outlook. We had a couple of pretty decent trades that came in last minute and the last of the week. We go ahead and minimize this. So we were looking at GBPNZD. That was the last trade that we had submitted in Telegram chat. So let's break down why we ended up selling GBPNZD. Let me go ahead and actually turn my camera on because there are some people that rely on my camera use and to see me. Cool. What up, squad? Sound like I'm in a fishbowl? How about now? Is that better? Can you guys hear me better? Sweet. Awesome. I'm just making sure because every time we've been on almost every other time we've been on these Zooms, the sound goes out. Okay, so I actually have my AirPods connected to the laptop this time. So anyways, so we're going in, we're looking into I'll go ahead and put the Telegram chat at the end of this Zoom, at the end of the market outlook. I just want you guys to take a look into 15 minutes or so, 20 minutes opening. So keep your eyes peeled to the new opportunities. So moving on, I found that the NZD was strengthening. I didn't go into any of the 10-year into Google. I just wanted to kind of so that's what I did for the beginning of this trade. I tried out UK. So I went in here and had relative more strength than the greater. You guys can tell we did go through. Made a decision on Brexit yet. Nobody's actually to go get out of the European Union. But what's up? Why is it still choppy? 1 sec. I will fix this right away. Okay, so you guys should be able to hear me a lot better. Okay, well, looks like we're going to, we're probably more than likely going to start using my phone from now on to Bluetooth with my audio. All right. Knew there was something off about the whole Zoom. Okay, so let's continue. So what I was looking at whenever I was talking about GBPNZD and the reason why we had entered GBPNZD midweek, we saw some very nice signs of midweek reversal with the harmonic pattern, deeply overbought. So we have had some divergence between the price point of 1.9163 and 1.9240. So if you kind of look at the RSI a little bit, that's going to show us a little bit more of where our divergence is in the main frame. So I want you to see on the other side of on the higher time frame, I want you to see that there's liquidity zone right here. This is where we would take out this previous high. Obviously we've already broken these lows right here. We came back and touched these lows. And one thing I'm going to start implementing in these trainings and these market outlooks, I'm going to start implementing a little bit more high reaction areas. Okay. As far as what I mean by high reaction areas, I want you to take a look into things like our impulse legs, like where price could easily revisit at a later time and still be an easy sell or an easy buy in the near future. Okay. So as far as GBPNZD is concerned, I mean, it just looks like a huge, key level that we've been expecting the entire time. I'm going to turn my video back on so you guys can see me. Like I said, this looked like a whole, support level, now resistance that had been broken a long time ago. We've had some very strong movement in GBPNZD for quite some time. This is going into, we're going to be walking this trade down to about 1.8134. My anticipation, though, just, keeping the parameters of the trade, of the harmonic pattern. So my anticipation, let me move these right out of the way. I don't like those on that. Okay. So I'm looking for, at least 500 pips. I want to get into, some trades where we can, collect about 500 pips easy on these trades. Okay. Now, with that being said, and they're being really good Fibonacci, respect, and they're also being Fibonacci levels within our harmonic pattern. That also confirms our harmonic pattern is even more so, a very huge confirmation for this to be a sell, in my honest opinion. So from, having a supply zone, having a harmonic pattern, having Fibonacci, everything lining up as far as, candlestick patterns are concerned, we go down to the 4-hour and we honestly didn't even need to dissect it any further where to take our entry. I just felt like this is a pretty easy way to get into it. I'm like, okay, so there's a, spinning top, doji indecision, meaning that, all of this buying, all of this buying power right here is just completely stopped. So give me 1 second. I gotta unmute myself. I don't know why I do that. Where did I go? Okay, it keeps telling me that I muted myself, which is weird. Okay, anyways, so we were looking up here, looking at the top right around 1.9219. If I pull up where we had sold off at, we sold off at our market limit, our sell. This is our market execution at 1.9173. This is the signal that we put in the group. Let me go ahead and just share that with you guys. Okay. So now the reasoning for getting out of NZD CHF was because I saw that there was strength. There's some more fundamental analysis behind this as the reason why that I jumped out of the NZD CHF sell was because CHF is actually pretty strong at the current moment. It's not as strong as NZD right now. So that's why I said, okay, we need to jump out of this as soon as possible. And guess what? We recovered our pips. We recovered the amount of pips that we had lost already just through one, trade that didn't even take like maybe 4 hours to regain literally everything we've lost in the very beginning of the year and the very beginning of the month. So continuing on, what I'm going to be looking for going into the new year, just to give you guys a little bit more expectation of what we can be, what we can be more efficient with. I want to be more efficient with just, trading a lot less, putting a lot more quality signals out there, a lot more quality ideas and content out there for you guys to just take a look at You know, I might even put some of this on Facebook, but YouTube and TradingView for sure, so you guys can really, you know, get a gist of what kind of longer term trading we could be getting into. Now, going into Euro USD, I broke it down not too long ago. I actually think I still have the picture of it before I changed the color of my charts. So that's going to require me to come over here to the other side on my PC and pull up that picture. 1 second. Let me bring this over here because there is some content in here that I would prefer to keep a secret. All right, let me see here. Where is the Euro USD phases? Nope, that's not it. Well, regardless, I'll just draw it up here anyways. What we were looking at as far as the phases go, I'm going to go ahead and just draw it up in probably a 4 hour. I think that would be more comprehensive. Or, yep, nope, wait, yes, 4 hours more comprehensive. Let's do this. So this is what we were really taking a look at, a stab at, I think. You know, a couple of phases that we had run into. Green phase, this is the first phase, second phase of rise. Okay, I'm going to show you exactly why we're going to go to a lower level on Euro USD here in a second. Let me go ahead and mark up those levels for you too. And do a live analysis for you guys too. I think it just makes sense. Why not? So we make this level right here. Nope. Go ahead and meet this one. And like I said, guys, I don't expect you guys to, you know, understand why I'm doing this, but just wait, be patient for a second. You'll see exactly why I'm doing this, like here in a couple seconds. Okay. So we're just looking at, you know, where price has closed, where it's, you know, moved into a couple times, you know, support and resistance. I'm going to show you some really important, you know, price decisions that the market likes to move in and out of. Or should I say the institutional traders? Show you some more, you know, really cool stuff. Okay, here's another one. And let's go in here, and then we'll finish it up with this one right here. Okay, so now what we're going to do is we're going to go into the 4 hour. We're going to take a look into set prices. So as you guys can see in these price areas, really just mark them up in places where they reacted strongly. Okay, so where we see the key candlestick patterns like railroads, pin bars, they're in the most reactionary levels, where we also see some other patterns like our three black crows. But what I want you to take into consideration are the phases in which we move. Okay, so I'm going to gray this out a little bit. Where's the color at? Probably make that a little bit darker gray. Something like that. There we go. Cool. So what I'm predicting, it's not that I'm predicting anything. It's just a fact that we have such a, you know, this is a 3-wave right here. This is, I just call it the power of 3. You know, we've already moved in a market of 3. Okay. So this is like where our buy areas were, and I would add on to, you know, just the amount of accumulation that was in between those areas. If you guys can, you know, kind of identify that, like this. Okay, yeah, that's going to be a white cyclone. You don't want to see that. But just by identifying areas like these, knowing that if there's 3, if we move in terms of 3, then we can really just understand a little bit further. So right here is our sell right here. Mark that red. Cool. So here's a previous low that we had came to. I want to kind of dignify that really quick. So this low that we approached after making the strong move up in Euro USD on the hourly, we had signified that we reversed out of this area of the 1.15 between 1 point this, and it's kind of funny because it moves in multiples of 20s. So if I were to mark this resistance, that would have been another area of entry. So how would we have known how to enter on something like this? Well, first and foremost, we just take a look a little bit further back into the 4-hour, right? So we've breached these highs, we've breached this high, and we've come up to touch this high, right? So we could imagine that this right here, back in October 15th of 2018 was a reactionary level. So if it was reactionary, I need to pay for this thing. I hate those pop-ups. So if this is a reactionary level and we came back to it, can we expect to come back and move out of it? Of course we can. But how do we gauge that we're going to come back to that? Well, we come to our swing high, to our swing low, right? And this is how I have my Fibonacci set up now. So the 70.50% would be the sweet spot. That's where I would want to enter the sell into the market. Since we've already broken this past structure, let me go ahead and grab my drawing tool. Since we've already broken this past structure right here, that would signify that we can go ahead and sell. We can go ahead and just like grab ourselves. We can just like put ourselves on, this next swing low and find ourselves a sell. So let me go ahead and just like adjust the settings on this Fibonacci so we can actually see the levels. Make them all purple. Why not? Okay, cool. So now that we see where I say the 70.5 is going to be the sweet spot. Okay. So how do we know where to enter from here down to here? Where are we going to go? Well, what we're going to do is we're going to take this same Fibonacci right here. We're going to move it down, okay, to fit the same, right? So we'll find the bottom of it. Kind of almost fit the whole thing already. I'm going to actually delete it. There we go. Now we just move it from here to here. And we'll go ahead and extend the lines out a little bit. There we go. So now that we've come up to the 79% retracement area of the whole swing, right? So this is how we know that we've come into a seller's market, okay? So now we have to go through another 3 phases on this, right? So here is the accumulation, and then the next order. This is where I was actually predicting the next orders to be accumulating at. Let's change this one to green. No, not blue, green. Come on. Whatever, we'll just leave it. Okay, so anyways, how do I come to this prediction? Well, I was doing some research and I found that the 10-year note, T-note, right, 10-year yield, actually mattered when it came to our Euro USD, our fiber and cable pairs. Let's just say that. Okay, let me adjust myself. Go to the full chart on Bloomberg. So what I discovered recently is the fact that currencies are chasing yield, right? So if the US dollar is being strengthened by the interest rates, this just simply means like the interest rates really dictate where the dollar goes, right? So imagine this. If you were to take your analysis with Euro USD, yield is on right now. So that just simply means that the dollar is strengthened. It's more strong than the euro right now. And it more than likely is more strong than the GBP. So let's take a look at GBP USD. Okay. So if say that the the US 10-year bond is continuing to go up in this manner on a daily, and we can take a look at it on a yearly time frame, it's now poised to go up, right? So what does that mean? That means that if we've been at an all-time low for, since, let me see, this is a year, by the way. This is yearly. So right here, how whenever I was going over USD CHF, I think it may have been 2 weeks ago, it's on YouTube, we talked about January being a cyclic, being in a cycle where it would sell off, right, in January. Well, the fun thing is we come back to the next January. We come back to the, January in 2018, and where was it at? It was at a low, and it went way the heck up here. We raised interest rates all the way to 3.2, right? So if yield is on right now, that means that currencies are weak against the dollar. So if the currencies are weak against the dollar, then I would venture to say that we could, since we've already broken the structure right here, we've already broken the structure. There's no ifs, ands, or buts about it. There's a structure broken. Lower highs, lower lows are already made. So that simply means that we could be aiming towards 120, 112. See what I'm saying? And something that I discovered about, I'm going to go ahead and change my arrow color too, because it's a little weird. I got to change everything up. Let me see here. I'm going to make it red. So have you noticed something weird about this? How it's moving? We're moving in multiples of 20. Okay. Like 66, it's all around. If you round the numbers, right? We're moving in multiples of 20. So with Euro USD, what I would, particularly say is that we're more than likely going to come right back down here. And this is where we find our order blocks from the institutions. Institutions obviously had a lot of risk on up to, 1.15, and they decided they wanted to sell it off from right up here. Okay, that's where another order block would have been, to take out this previous high, to come up here and just drop it away from retail traders, right back down to 112. I mean, I don't find this impossible, guys, because what did we do up here? We revisited this high right up here, didn't we? We came down, we've sold off multiple times. We revisited this high of 1.1571. Guess what we're probably going to end up doing later? We're probably going to end up coming down here and adventuring down to 1.12, in the 1.1250 range of Euro USD. Now, is there a possibility of it going up to, because there was a lot of speculation of it going up to, up here in the 118, 117 area. I don't think that's possible right now anymore. A lot of times we do have to look at the market with if you guys have looked at the young girl, old lady, I want you to look at this. Young lady, old lady reference, Okay. So when looking at this picture right away, it's really easy to see that there's a young woman here, right? Well, on the flip side of that, it's not as detailed. It's not as, unique. It's not as plain sight. There's an old lady. If you look at the outline, see, this is the neck of the young lady right here. Well, the neck of the young lady is actually, the bridge of the nose, like right under here's the nose. Here's the floor. Okay, there you go. Here's the mouth. There you go. Now you can see the old lady. Since now you see the old lady, here's what I want you to take. Here's what I want you to take into consideration. This no longer is valid. 117 to 1800 is no longer a valid area for us to go to at the current moment. So just now keep your eyes peeled for 1.12. That's what I want you to keep your eyes peeled for right now onto, because now we're going to have, this is the first level of drop, second level of drop, and the third level of drop is going to be right down here, possibly down here. I'm not going to tell you that that's exactly where we're going to drop down to, but that could potentially be the area where I think where personally where I'm going to be aiming for. Now again, in GBP USD, it's a little bit different of a story. GBP USD is a in a bit of a kind of a chop, if you will, in my honest opinion. But if you take a look on the daily, again, the same candlestick pattern had formed the daily railroads. That's what I want you to pay attention to. Very seldomly do people pay attention to candlestick patterns, and I don't know exactly why. It's kind of weird how people don't pay attention to these things, but when it's in an area of tremendous interest, like right here, for example, where we find a gap. We also had on GBPNZD. I'm going to go ahead and, this is a different piece right here. I'm going to actually keep that up for your viewing purposes. Here's also another one on the 15-minute time frame of, the levels that we just drew up. What we were just, looking at earlier. These levels need to be taken out, and I'm pretty sure that they will be. And this is where our entry point will be, possibly. I think we're more than likely going to, in Euro USD, we're going to accumulate between 113.62 and 1.1342 going into Monday's London and New York session. We may have a strong move up to retest, the 113.92 area, and then just right back down to 112.69. I'm not entirely sure, but like I said, we're going to go back in here, and we're going to take a look into GBPNZD and show you that there is a little bit of a correlation here. And man, do I love Red Bulls. All right, I think the market is more than likely open. More than likely, let's take a look here. It is 4:05 and the market should be open. So like I said, let's go ahead and take a look back into GBPNZD. The only reason why I'm going over these pairs, ladies and gentlemen, is to show you, higher profitability trade setups. I want to show you guys some examples of these things. Enough dilly-dallying like we did last year. We're not going to go through 30, 40 different analytics on 50 different trade setups when the best trade setups are right here in front of us. Okay, so like I said, there's a big correlation between GBPNZD and GBPUSD. Funny thing is that GBPUSD showed us our hand by giving us the railroad patterns on the daily. Right here at what? A whole level at 1.38. Okay, that's a big deal. 1.30, that's a big deal. Rejecting that whole level completely, and that's just a little bit of Mike's. That's a little bit of a mix of Mike's quarter theory, and you know what? There's multiple different gaps in the market too. You guys know that whenever I trade market, gaps, that we're going to find some very profitable setups. That's just my honest opinion. That's where I've been finding really, profitable setups is right here where these gaps are. And also keep in mind, guys, this is all part of a trading plan. Just these one or two things, they can be good things for you. They can be breakthroughs for you guys, but they're not just the be all cure all. What I want you guys to see is how the market is manipulated through order blocks and through institutional order flow. That just simply means that the big banks and where they want to move things. Okay, little bit known to us that they were actually using, this is a bit of a market data. This is market data that you could be using to spot longer term trends is what I'm saying. When you go over here and take a look into the the longer term, 10-year note yield. When you go and look at this, this is going to tell you the interest rate and the strength of the dollar, where avid investors are going for. So do we have any questions so far, ladies and gentlemen? Any questions at all? Invite to the yes, the Telegram. I will most certainly invite you guys to that. By the way, guys, I don't double dip on pips. I don't count pips based off of, positions. I only count pips based off of what we've locked in. What I've told you guys to lock in on on this Telegram group. Okay. So no need to fear. I don't, put fake news out there. So there you go. And I'll even share some testimonies in there too, guys. I also share testimonies with people. I show people, what other people are yielding from, the results of the knowledge that I'm giving you guys. And I'm not saying this to impress anybody. What I'm saying is that, I want you guys to follow reputable people. I want you guys to follow people who know what they're doing, and people that aren't some kind of schmucks that are trying to, just give you value for no reason and try to market you into some kind of weird system that doesn't work. Okay. What I want you guys to know is that, being an IML trader, being a Forex trader, it can be rather difficult trading Forex and navigating without the proper mentorship, and I want you guys to know, I also record my trades. Okay. I also record my trades, every single one of them. I mean, there's more trades in here than meets the eye. There's more folders in here that I have. Okay. And that's just sharing with you guys facts. I'm not sharing with you guys some humbug hype or anything like that. Every time that we jump on these market outlooks, I want you guys to know that. So, that's just my full warning. I'm never going to say that again, you guys. That's it. But what we will find is that we are always constantly learning. Okay. Always be constantly learning. Doesn't matter. Okay. I may be, really, really good at finding some of these nice, beautiful long-term setups, but that does not necessarily mean anything if I'm not consistently growing as a trader, consistently growing from other, sources, including my mentors. So always latch onto a mentor, always latch onto, always latch. Hey, look at that. Look at that. That's beautiful. That was like an inverted hammer. But latch on to, ideology that makes sense. Not ideology that's half-witted, work for you. You want things that are going to work for you, consistently, but you have to put in the work. Remember, anything that I'm gathering, any type of information that I'm gathering that I feel is a step forward towards progress, towards being a profitable trader, it's not for me. It's for me to share with you guys. Okay. So I'm not going to sit here because my reputation would be on the line. I'm not going to sit here and share with you information that I don't deem necessary to share with the public. Because I'm, if somebody like the Ozark trader is trying to make a public name for themselves, why would they want to damage their, reputation with irreputable sources? Okay. So like I said, take a look into these pairs yourself. Okay. They're pretty much primed right now for some very long-term setups, long-term as in 500 pips right here. Euro USD. Let's go in here and measure the amount of pippage that we could possibly get out of this. You know what? There's a potential of 140 pips. Not a bad trade at all. What we're going to want to do though is we're going to want to look out on the weekly, and I mean, we're going to have to put that back in auto, but we're going to need to take a look out in here and just make sure that in our, longer term, in our longer term outlook, that we're not missing out on the longer term, trades. Obviously, you guys have seen where there's a gap down here somewhere. It's not showing, I guess, but there's a gap somewhere in this area of 1.06, 1.08 that we want to jump right back down to. Okay. So longer term, keep in mind, we're looking for longer term movements. And what indicates those longer term movements? Well, whatever is whatever is giving strength to the dollar, and that would be the 10-year T note, which gives us just an idea of where where interest rates are going to be going. Just long story short, okay. So what's your homework for today, guys? What I want you guys to go over. I want you to go over gaps. I want you to go and take a look at the gaps in the market, and I want you to look at high reactionary areas. And what that simply means is when price begins to move like this. Okay, let me move this out of the way. If you can find, I want you to just research like why price does this. Figure out why price does that. Okay, and I want you to put your supply and demand and your support and resistance levels in the most important areas, which should be at where areas that make sense, where price action and candlestick patterns make sense. Okay, so that's your homework for today. Okay, I've already published GBPNZD. Look for pullbacks. Look for the pullbacks to re-enter. Okay. Do you guys have any questions so far? Keeping up? It's a little bit different. It's a little bit different on this Sunday because now we're a little bit more, we're a whole lot more focused. We've refocused, we've repositioned, we've reassessed, and we refocus. Every time we get back into the markets every Sunday. I know that Friday and Saturday, whenever we release from the market, it's kind of like we're being it's not being released from a job, but it's really upsetting, except if you trade for cryptocurrencies. It can be somewhat upsetting sitting there just like, oh my God, I want to trade the Forex markets. I've got these trades I'm looking forward to. But just keep in mind, guys, that if you're swing trading, position trading, you don't need to be looking at your phone. You don't need to be looking at your trades, 24/7. You don't need to be looking at them at all throughout the day. Just make sure that when things align perfectly and they align with your trading plan, if you're longer term trading, just shut off your trading portal, because what that tends to do for you guys psychologically, what that tends to do for a lot of traders is it instills trust in yourself. You're trusting yourself in the fact that you know what you're doing when you're entering the markets. So what I challenge you guys to do going into this week, looking for your trade setups, reading the books, going through the market outlooks in the past, gathering some of the data to add to your trading plan. What I challenge you guys to do is really, really try to trust yourself. I know that sounds really hard because we get emotional. We're emotional when it comes to trading. And one thing I do like to say to my students and to some of my mentors as well, that they've been telling me is to work on emotional intelligence. A lot of us don't have a lot of emotional intelligence. We don't know that we can work on emotional intelligence though. Okay. So go and grab the book, Emotional Intelligence 2.0. Start researching more about how to control your emotions when it comes to the markets. Okay. Because if we don't understand that, we don't understand ourselves and we don't understand our trading, and therefore we can't be profitable. So with that being said, guys, that's all I have for this market outlook today. Take a look at GBP/USD, GBP/NZD, and Euro USD. We've got some very beautiful, pairs. We've got some beautiful setups coming up we're going to go and look into Monday, New York session for the entry. Okay. So with that being said, guys, I love you guys. That's it for today. Let's kick ass this week.